The Reserve Bank of Australia this morning kept interest rates at 1.5% unchanged as largely expected. And in the succeeding policy statement, the Reserve Bank did note that growth was still optimistic, but they did note that the employment picture down under was mixed and that wage growth remained slow. This was a new phrase that they added to their policy statement. Immediately following the announcement, the Aussie popped up against the US dollar, but found stiff resistance at the 26-day moving average at 75.60 levels. And ever since then, the Aussie USD has pared some of those gains on the back of that slowing wage growth statement that we saw. Overall, the Aussie went through a nice technical bounce. It has seen good support, a good buying support against the US dollar. Remember, last week it did test that channel between 74.50 and 75 levels, and this remains a very, very important support level for the Aussie dollar going forward. We expect to see a little bit more upsides in the Aussie dollar going ahead, and we keep 75.50 as an upside target in trading today. Yesterday, during the US session, we had a round of continued weaker numbers from the US. Personal income and personal spending both came in lower than expected at 0.2% and 0.0%. Both were slightly lower than expected. Also, the ISM manufacturing PMI data came slightly lower than expected. Overall, this kept any gains in the US dollar index in check. That dollar index continues to consolidate in the 99 levels, and it continues to find its feet in the lead up to tomorrow's FOMC rate decision, as well as Friday's US non-farm payrolls. Also, earlier in the day, we had the release of the Bank of Japan's meeting minutes. Once again, it didn't change too much. What they had focused on was the overall inflation rates in Japan, and they continued to maintain that they would take aggressive measures with regards to QE in a bid to re-accelerate that inflation target above 2%. Following that news, the Japanese yen weakened against the US dollar. It's trading above 112 levels in trading today, and the next upside target remains at 112.50 in trading today. Overall, the US economic calendar is very light. We do expect to see some consolidation in the lead up to tomorrow's FOMC rate decision. And of course, this is going to be followed by the US non-farm payrolls report, which is releasing on Friday.